Mark, do you think the key focus of the market in the short term is whatever headline we're getting out on trade?
I think it's trade on, trade off every day, all day, and that's what the market's oscillations are really all about. I mean, we've been saying now for months on end that the market's been really held hostage to these trade negotiations, and only in the last couple of months, with the relief of no further escalation seemingly in sight, that led to the last 100, 150 points on the S&P 500. Obviously, recent gains that have been digested here in this pullback over the last couple of days is a reflection of the concern that perhaps that enthusiasm needs to be taken back a little bit. But once again, it was restored today. So hopefully, in our base case remains that it will go forward, at least in terms of a phase one agreement. That should be enough to allow the market to continue to advance.
Josh, the fact that the two indexes, two U.S. equity indexes that did the best today were the Russell 2000 and the transportation average, what can we glean from that?
Well, I think they were two of the hardest hit. Is probably, it's not more complicated than that.
Okay.
But transports are interesting. They're still in the middle of this range. They really haven't looked good since February. I don't know that this is really a story of the economy, though. I think it's a story of the sectors that are in the transportation index having their own issues. So I try not to react to it. Look at that chart. I mean, it looks more like an oscillator than an index. It's in a very well-defined channel, hasn't been able to break out to either the upside or the downside. It's people that look at that and say, wait, it's not confirming the Dow Industrials. Don't worry about that. That's from the 1970s. I treat it a little bit more as a sideshow.